Headlines are screaming war risk, and Wall Street is sweating. We've seen the S&P 500 pull back as geopolitical tensions hit a boiling point. But here's the million-dollar question. Is this the beginning of a deep correction? Or are we looking at the buying opportunity of a lifetime? Welcome back to US Market Pulse. Today, we're cutting through the noise. I'm breaking down the 3 critical indicators that tell us the bottom is in, and how you can position your portfolio for the eventual recovery. Let's dive in. First, let's talk about the math. War risk puts a massive uncertainty premium on. We're seeing a flight to safety, crude oil spiking, and supply chain fears creeping back into tech markets. Historically, geopolitical shocks cause an initial 5% to 10% drawdown. If we break below our first major support at 5,850, the next stop is the 5,700 zone, right where the 100-day moving average sits. But remember, the big money doesn't panic sell. They look for where the maximum chaos meets maximum value. How do we know when the risk turns into opportunity? Watch these 3 things. The VIX mean reversion. If the volatility index crosses 25 and then starts to curl back down, that's your first sign of exhaustion. Treasury yields vs. equities. If yields start dropping while stocks fall, the market is pricing in a recession. But if yields stabilize while stocks hit support, the fear trade is over. Nvidia floor. As the engine of this market, watch for Nvidia to hold the $170 level. If the leader stops falling, the market follows. So, what's the play? Don't be a hero. Scaling in is better than going all in. Use those support levels we discussed at 5,700 and even 5,500 if the pullback deepens. This dollar-cost averaging approach minimizes your. Next, consider hedging with defensives. Look at sectors like aerospace and energy. They often act as a natural hedge when geopolitical tensions rise, providing a buffer for your portfolio. And finally, keep some cash ready. Keeping 10 to 15% in cash allows you to pounce when the panic hits. Remember, cash is not just a defensive asset. It's your offensive weapon for seizing opportunities when others are selling. It's about being prepared, not predictable. The bottom line, geopolitical noise is temporary, but price levels are forever. Watch the pulse, stay disciplined, and don't let the headlines shake you out of a great long-term position. What are you doing right now? Are you buying this dip, or are you moving to cash until the dust settles? Let me know your plan in the comments below. If you found this analysis helpful, smash that like button and subscribe for your daily macro updates. I'll see you in the next one.